The two big shifts we're seeing are firstly, America-Chinese tensions, and that's having a knock-on impact on African economies. We've seen less US aid, higher tariffs for African exporters trying to get into US markets. But you've also seen, because Chinese exporters are struggling to get into the US market, more effort by them to sell goods to the rest of the world, including in Africa. And the other big shift we're seeing is the rise of the rest. So the rise of middle powers, especially from the Gulf, who want to invest more in Africa and trade more with Africa. And on the whole, African countries, they're trying to diversify their portfolio. So having good relationships with the US, with China, but also with these ascendant middle powers. And at the same time, Africa is also trying to do a bit more at home to make itself more resilient to some of these larger shocks. I think there's a global risk and then there's a domestic risk. So globally, we live in a very uncertain age. And while African economies have actually been fairly resilient this year on a macro level, growth is decent, sovereign yields are down, there's been lots of rating upgrades. You just never know. And if there's a big risk-off move, then African economies could suffer from that. But also, domestically, there is still a big debt problem for a lot of African economies. Most today spend more on servicing debts than they do on healthcare and education. And a lot of that debt is not just external, so owed to China, Western creditors or multilaterals, but actually owed to African banks themselves. And when government debt is weighing on domestic bank balance sheets, that can pose a risk for those banks, but also crowd out private investment. It's very common to hear these days that Africa is wrongly priced by the market, that it is actually less risky than investors would commonly assume. And I think there is something to that. On a macro level, it shouldn't be the case that what happens in Kenya affects perceptions in Ghana, for example. However, the risks are real, whether those are currency risks or political risks. And just as importantly, the absence of clear returns is just as important when it comes to a barrier. Because if you can't get your money out, you can't make money, and you can't find bankable projects, then that's going to add to the perception that, okay, maybe I can handle the risk, but am I ever going to get a return? So yes, I think sometimes Africa is unfairly treated, but if it were to sort out some of its own problems, including providing more information about the real returns available to investors, then that would go a long way to closing the gap between perception and reality. So you can talk about countries and you can talk about sectors. I mean, I think, and if you're looking at countries, there's a lot of excitement and momentum around Morocco at the moment, which is itself investing more in the rest of the continent. Then some of the smaller economies in West Africa, such as Côte d'Ivoire and Benin, are doing really well. And for me, I think one of the things I'll be looking for in 2026 is whether some of the supposed structural reforms in the two biggest economies in sub-Saharan Africa, Nigeria and South Africa, come to fruition. Like, are we actually seeing the so-called sleeping giants finally waking up? And there is some evidence of that. Then on sectors, I mean, you're still seeing a lot of positive investment into fintech, but as African economies try to be more resilient and, for example, embrace the African continental free trade area, there's going to be a lot of money to be made. But in addition to the obviously exciting areas such as fintech or AI, data centers, you're going to have a lot of money potentially to be made in quite boring areas as Africa embraces this big free trade area. And as it trades more with itself, there'll be more demand for logistics, for warehousing, for cold storage. So while, yeah, there's some brilliant fintech entrepreneurs, there are also some kind of under the radar African business people who are seeing where the continent is heading, more intra-African trade, and already embracing that. So earlier this year, I wrote a special report for The Economist called The Africa Gap, which was all about how the average income in Africa has been growing far too slowly, whereas in the rest of the world, it's taken off. If you look on a chart, it looks like the jaws of a crocodile. And underneath that is partly a demographic story, but it's also a productivity story. African economies are just not getting as much output per worker as they need to, whether that's in agriculture, manufacturing, or services. So one of the long-term things I'm looking for is whether African economies can finally get the capital they need, embrace the technology they need to see the sort of rapid growth that you've seen in Asia, for example, but also which is needed to respond to this huge demographic shock.
Wow.
It will be very soon that half of all new entrants to the labor market are from Africa. And if they don't have jobs, there's going to be political problems, not just on the continent, but potentially in the rest of the world. And for there to be jobs, you need faster growth. You need that productivity to be driven. So the mix of demography and productivity are the two big things that I'll be looking for as long as I do this job.